Good morning. Paul Georgie from Allendale, November 30th, Friday morning, and we're seeing a little profit taking this morning after the several days of rally we've had in the grain markets. Some of the factors that I think are influence this pressure also is the delivery process. We've seen 246 contracts of corn delivered through the date of 7/12 or 7/10, and we had 2,119 contracts of wheat delivered through November 23rd, and also 2,200 contracts of soybean oil delivered through the same date of 11/23. So that is kind of a surprise to the trade, even though we had been talking about the potential for delivery. The trade was expecting, with the strong cash markets, that there would be very few deliveries, and yet we've seen some, and basically because of the terminals along the Illinois River have decided to deliver grain because there's no other place to go with it. Mississippi River problems is causing shipment issues, and therefore they can take the chance of delivery and still maintain control of it at the end of the process. So reason for some initial pressure here this morning. Other news is the profit taking that we're seeing throughout the commodity markets, or risk off type trading, as many call it. The lack of any new positive news on the physical cliff negotiations in Washington. Some headlines come out overnight that from Congress that says that they're still far apart on any kind of a deal. So those are the kind of headlines we're going to continue to see throughout the weekend, and certainly will have an impact on traders' emotions and attitude come Sunday night. Other news, the Buenos Aires Exchange in Argentina come out with the Argentina corn planting estimates. 52.4% of the corn planted down there. That's running about 12.4% below last year's level. Soybeans at 45.2% planted. That's about 11% below last year's level. We're also getting more talk and news wire reports anyway that farmers in South America, especially in Argentina, will be planting more soybeans once this next rain system comes through. Now there's a large system moving into the growing regions of Argentina that could give anywhere from 1 to potential 6 inches of rain. If that heavy rain does hit, the producers will likely have to move to soybean plantings rather than corn. So that could weigh on soybean prices here early next week. We've also got and have seen yesterday a lot of spread action going on, where we've seen nearby contracts under pressure and deferred contracts gaining ground, soybeans as well. And what's happening there is the fund roll started. We've got Rogers funds have got about 2 days left of their normal roll process. Goldman roll comes in next week, where they're selling the nearby contract and then buying a deferred contract. Some funds will go to the next month, others will go out a whole year. So those are things to watch, and that will continue to influence the market as we are in holiday trading and lighter volume. Those type of situations seem to cause more action and movement in the market than anything else. In the livestock markets, cash cattle bids and ask are still far apart. The packers are very reluctant to bid up on cattle. They were expecting cutout values to be sharply higher after the Thanksgiving holiday. We haven't seen that. We've seen marginally higher beef prices, but not enough to improve that packer margin. It's estimated that the packer margin right now is $70 a head in the red. They want to narrow that gap, and with the first of the month coming up here, it's believed that they're just looking ahead and will take contract cattle, previously negotiated priced cattle, ahead of going out and buying from the feedlot. And that's giving them a bit of an upper hand here for a few days until those contracted cattle move through the process. The choice beef yesterday up 30 cents, select up are down 83 cents. Pork cutout values were down 52. We've seen cash markets in the hogs, the Iowa, Minnesota market that watched very closely. That index was actually lower yesterday, although it was on relatively light volume. The trade's looking at that and saying, well, maybe this cash hog market's high enough. The premium that we have in December futures over the cash index right now has got many traders concerned that the hog market is due for some type of a correction. So watch that and stay in touch with Allendale's research. We'll keep you informed on that aspect as well. We think going into the weekend and some position evening here into Friday's close, again, the main focus is going to be headlines. What kind of negotiations and what kind of progress is being made on the physical cliff issue that will certainly be talked about on news commentary and news shows here over the weekend. So if you got any questions, give us a call here at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.